I decided for today to go into some uncharted waters for me and look at an industry or sector that I haven't really spent that much time looking at in the past, which is retail. So let's go ahead and play the intro so we can get this video started. Oh, yeah, that's still my job. Hey everyone, and thanks for joining me today. My name's Matt, and as always before we get started here, I just need to say, not advice, don't take this as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only. Also remember, if you like this video, it's a 5-cent donation for charity, and if you subscribe, that is a 10-cent donation for charity. As I mentioned, I haven't really spent that much time talking about retail on my channel. Probably has a lot to do with when I started the Watchlist Wednesday series, was when the whole lockdown first started and retail just did not look like an attractive investment to me. And sure, we can make the argument that I have talked about companies like Dollar General, Walmart, Lowe's, and Home Depot, but I look at companies like Academy Sports as a different kind of retail. Now before we get started here, I just really want to quickly say that if you're watching this video to learn about a short squeeze going on with this company, this is not going to be the right video for you to watch because that's not something I'm going to talk about because that's not my investing style. I honestly had no idea this was one of those Reddit or meme stocks until I really started doing my research and saw some YouTube videos pop up. But I apologize, there's a ton of info out there if that's what you're after, but this is just not that video. And if you're not familiar with Academy Sports, as the name implies, they sell a lot of outdoor or sporting goods equipment. Now this could be anything from a lacrosse stick to apparel items to hunting equipment to outdoor cooking and camping things like tents, grills, what have you. And a lot of times they actually sell these products at a fairly reasonable price. Not too long ago I actually bought a pair of shoes there for $25 that were going to be like my outdoor walking around shoes, and they've actually held up pretty well for being just a $25 pair of shoes. So it's a store that I really enjoy going to and really just came on my radar within the past few years. Now Academy Sports was founded in San Antonio, Texas, and started back in 1938, but it didn't hit the public markets until around October 2nd or 3rd of 2020. So a fairly new company on the public markets, which does mean and seems to be a recent reoccurring trend here that I just don't have that much information to dig through. But when it comes to the numbers this week, I did want to do a comparison, and the companies that we'll be comparing Academy Sports to is Dick's Sporting Goods and Sportsman Warehouse. Alright, so taking a look here at these numbers, as we could tell from a market cap perspective, these are pretty small companies, especially Sportsman Warehouse, not even being at $1 billion market cap. That is probably one of the smallest companies that I've had on a Watch This Wednesday, even just for the comparisons. And I guess that makes sense too. When we look outside of their direct competitors of companies like, but I guess that makes sense because when you look outside of their direct competitors, their other competitors that they compete with would be companies like Walmart, Target, or even Amazon. And those are all very large companies, but obviously have a broader focus, where this is kind of a niche market. What also stood out to me is this is probably the lowest 3 PE ratios I've ever had on my Watch This Wednesday series. We have 7.03 for Academy Sports, 9.11 for Dick's, and we also have 7.68 for Sportsman Warehouse. Now, seeing those low PE ratios is great, but one thing I really seem to just talk about all the time on my channel is how the PE ratio really is not the most dependable metric out there. Because while, yes, this could look like a value stock, when you're investing in companies that are value companies, then I believe it's important to make sure that you're not investing in a value trap. The difference being that when we have a value company means that we could be buying a great company just undervalued, or maybe the market doesn't see its full value yet. Where a value trap might be a company where the numbers show that they're undervalued, but they're not really doing anything to help grow this company or grow sales, revenue, income, anything along those lines. And we can actually kind of see that here with the EV to sales number. Now, all of these are low. Again, if you look at it quickly without context, it might look like an undervalued company. But generally with an EV to sales, I like those to be 1 to 3. And what happens when they're below 1 means that, yes, this company could be undervalued, but it also shows that their sales aren't really doing anything exciting to help this company grow or be a top performer. Now, what gives me a little bit more confidence in this situation is seeing that the two competitors also have that EV to sales below 1. Now, if this was a one-off and if Academy Sports was the only one with an EV to sales below 1, then I would have some concern. But clearly, as we can tell here, it seems to be a trend, maybe specifically in the sporting goods retail store. Academy Sports to me does seem to have the least impressive revenue growth, being at 25.44%, especially when we take a look at what Dick's and Sportsman Warehouse have done at 36.83% and 59.71%. As always, if you're a dividend investor, then the one that might catch your interest here the most would be Dick's Sporting Goods, as they are the ones that pay a dividend, but I'm not really after that, just something I wanted to point out in case this is something you're looking at and does always want to take a dividend into consideration. And lastly here, these all have a quick ratio that is below 1, fairly substantially too, especially for Sportsman Warehouse being at 0.23, Academy Sports at 0.49, and at Dick's being at 0.75. Again, these are numbers that I like to see over 1, but given that all three of these do have the quick ratio below 1, is okay with me. Because when I did take a look at Academy Sports' balance sheet, we could see that they do have a lot of long-term assets. The problem is that their short-term assets don't cover their long-term debt. Generally, we like to have short-term assets be able to cover debt, both short and long-term, because that means that if they need to pay off debt quickly, then they have the ability to do so. But with having long-term debt exceed what they have for short-term assets, could mean that if they had a debt be called or if they needed to pay down some kind of loan that they have, they might struggle to do so and might need to raise money, whether that's through taking on more debt or through issuing new shares. So I want to point out another thing that's kind of obvious about this company, in that they are not really a company that I traditionally like to invest in because they don't have a reoccurring source of revenue. They don't have any kind of subscriptions for people to sign up with. They are a retail company, which, as we saw last year, can be greatly affected by certain situations, which is obviously a concern for certain companies. And they don't have the healthiest balance sheet. So what really stands out to me about this company? Well, their current CEO has really only been in office for about 2 years now, 3 years, give or take. I think he started in 2018. And to me, being CEO for only 2 to 3 years does not give you enough time to really start making significant changes to this company. But I do think some of the plans that this CEO has will be very beneficial for Academy Sports. As I mentioned, they did start in Texas, and I'm in North Carolina, and we have 3 of them that I could think of off the top of my head. So they do have a presence in more than just one location, and that's something that they're planning on expanding, is reaching some new territories where they don't currently operate, as well as having a more prevalent presence in the areas that they do currently have locations, and areas like Charlotte, North Carolina are a prime example of that. They also have a huge focus on what they call BOPIS, which really just stands for Buy Online, Pick Up in Store. And they said what they're seeing is a lot of people are using this BOPIS to buy heavier or more expensive products. So think of like a pellet grill or an offset smoker, or even like a kayak or a tent. So people will buy it online, pick it up in store, but if you buy, an offset smoker from Academy Sports, then you might have forgotten to order charcoal. So then you go into the store and buy some charcoal, but while you're in there, you buy, 5 other things that you probably didn't need. And they actually said that this BOPIS, or the Buy Online, Pick Up in Store, has been able to increase the amount of foot traffic that each store has, which in turn should lead to more sales. Now, as we saw, their enterprise value to sales was nothing impressive, and it was actually, I don't want to say go as far as saying concerning, but it can definitely be in a better position. So I'm hoping that as we get a few more quarters worth of financial information to watch this, that maybe that EV to sales number can increase to like a 1.2, 1.3 to make me really feel comfortable with the value opportunity of this company. Now, before I go on with this next one, I just want to say I don't say this next section to offend anybody. I know there's a lot of ESG investors out there, and that's great if you are one. If you are one, though, Academy Sports is probably not going to be a company that catches your interest, because they do still sell firearms. And the reason that can be an opportunity for Academy is because Dick's announced that they will be starting to eliminate having firearms within their stores. And Walmart, I think, has done the same. I went on their website and I saw that they don't sell any guns online. But I also saw some conflicting information of how they're starting to put it back into stores, so I'm not really sure what Walmart's plan is. But to my knowledge, they're also getting out of the firearms sales business, which, if you are somebody that's a hunter, kind of starts to minimize your opportunities of places you can go. Again, where I live, probably the 2 most common places you'd go to, 3 really, would be Bass Pro Shop / Cabela's or Academy Sports. With Dick's out of that ring, then that obviously can create some more traffic and increase increase sales for companies like Academy Sports. Also, from 2020 to 2021 fiscal year ends for these companies, we can actually see that they were able to almost 4x their net income, which is obviously something very exciting to see. Now, with this company only being on the public markets for a brief time frame, we don't know if this is just a one-off year or if this is something they can do consistently. So this is obviously going to be something that we'll want to pay close attention to as we start to get some more fiscal year-end reports and make sure that they're able to continue growing their sales. Now, as I mentioned, one of the ways that they're trying to increase their sales is through this whole buy online, pick up in stores, which I think is a great thing to have, and I also know that other businesses like Walmart have incorporated this as well. But they are also working on becoming a leaner operation by carrying less inventory or just carrying more of the inventory that actually sells, not what sits on the shelves. Now, a threat that we see with a lot of retail businesses today, especially Academy Sports, does have to do with the increase in minimum wage. Now, Academy Sports says that they've been able to increase their minimum wage to be competitive with other retailers like Walmart, but this does seem to be putting a little bit of stress on this company because one of the ways that they said they are going to increase efficiency is by eliminating headcount, ultimately by getting rid of some employees that aren't providing much value. So you might see less associates in store, so they're not paying for people just standing around. They are also getting rid of some of their trucks where they do their shipping from, and they said they're just going to have more fuller trucks, but less of them. And they think this will make them more efficient, but it also is a big way of cutting down costs. So with the increase in minimum wage, like I said, they want to make sure they're doing what they can for their employees, but unfortunately that does mean they're going to have to let some go in order for them to keep the same margins that they have or hopefully improve the margins. And this is a challenge for them to do because they still want to make sure that they're able to sell products at a price point that is still attractive. As I mentioned, I like going to Academy Sports because I think they have fantastic prices on a lot of items, especially on some of their own brands, which I didn't mention this earlier. They have a ton of brands right now, and I'm sure that's actually something we'll see start to be cut down or maybe spun off or sold off, because that can really help them with a leaner operation as well by minimizing how many SKUs they have to carry. But their CEO has made very clear, again, that the price point is something that's very important to them as it is to the consumer. They mentioned and they talked about the supply chain issues, how actually the price of bicycles has had to go up significantly, but they're still doing all they can to make sure that they have a $49 bike for children and a $99 bike for adults, always in store, again, allowing for people who aren't able to shell out over $1,000 for a bike to still be able to go out and get one and stay active. So that really speaks to me as a consumer because I like when companies are looking out for the best for their consumers and doing everything they can to not have to increase prices or drive some consumers away because they can't afford it any longer. And generally, I found companies that do have this customer focus are the ones that tend to do the best. So this is a company I feel like it's extremely speculative of an investment. I think right now I do see this having the potential to be a value trap, but it could also be a value opportunity. But it really depends on how these next few quarters go for this company and if they're able to sustain the same kind of growth that they've had kind of after all the stuff from last year's lockdown wears off. Anyway, though, as I mentioned, I'm more or less just a fanboy of this company, so I did add them to the Watch List Wednesday portfolio. Let me get that pulled up so we can take a look at how we're doing today. All right, so we are losing some money here on this position, about $58. I bought 125 shares, and that was at around $40.70 a share. So last clocked in at $40.23 a share. Again, I think this is going to be a pretty volatile stock, because retail, to me, while yes, it could be a value opportunity, I think there's just an inherent amount of risk that comes with retail nowadays. Also, this company, when it hit the public markets back in October, started at $13 a share. It's already grown to $40 a share. So it's grown exponentially, as a lot of companies have, but it'll be very interesting to see if that's something that's sustainable for the long run. Anyway, just taking a look here at some of the other positions we have. So Blackstone is still the leader here, but Shopify is making a little bit of a fight here, having us at a $1,400 gain with only 5 shares. Shopify never ceases to amaze me. I just love that company. Squarespace is also doing pretty well, just shy of a $400 gain. Microsoft up over $400, and the portfolio is at a $2,100 gain right now in total. So I am pretty happy with the way that this has been performing. One position I don't have in here that I've reviewed so many times is Pinterest. They've been doing so well recently that I really wish I had that in here to kind of offset what Tesla has done for this portfolio, but it is what it is. Anyway, that's my review here of Academy Sports. I hope that you enjoyed this video. If you did, remember, just go ahead and like it. That really helps out my channel, and I really appreciate it. And if you haven't subscribed already, I just ask that you consider doing so. With all that said, though, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I will let you go ahead, enjoy the rest of your day, and I will see you next time.